Retired lawyer Ollie Price is tired of taking a hit from the banks. He's steering away from term deposits and putting 20% of his money in gold instead, but he doesn't expect much in return.
The most prominent thing in my mind at the moment is not making any profit, but just making sure I don't lose what I've got.
It's a predicament facing many retirees who aren't eligible for a full pension but haven't built up much superannuation and must rely on interest from term deposits.
Most of our members are on a part pension and they are very incensed about the government's inability to face reality.
People are sort of looking to see, really, where on earth can they put their money? And, of course, things are going up all the time.
About 3 million households in Australia rely on income from term deposits, according to Digital Finance Analytics. 5 years ago, the average term deposit rate was 3.22%. 7 RBA rate cuts later, the average deposit rate has more than halved to 1.38%, and it's set to fall further if the central bank moves again next year, putting retirees in a tight spot.
Many of them will have had equity in their property, if they have a property, and so that begs the question, do they sell the property, release equity and use some of that? But of course that's a one-time trick, you can't keep doing it.
They may have to sell their house at a price which is much lower than what they had been anticipating it would be, sell it faster, quicker in timeline.
Some retirees like Janice Ricks are calling for more creative solutions.
Both federal and state government should be able to put out some sort of a bond just for people who are of pension age.
They also want the federal government to lower the deeming rate, which determines the size of a person's pension if they have financial assets. Right now, the deeming rate is well above the average term deposit rate.
You are being denied access to a part-age pension, and over a period of years it banks up to quite a bit.
Some retirees who've transferred their savings out of banks and into shares say a rate cut would boost their nest egg because the stock market may rally.
It would also be good for my daughters who both have mortgages, so it's certainly assisting them at the moment.
A fact the Reserve Bank will have front of mind when it meets next year. Emily Peace, ABC News.